This latest bull run has been spectacular. But how long can the market keep it up? How much longer can we go higher before the gravitational pull of stocks inevitably takes us right back down? Isn't it a sucker's game to believe that this rally can continue? That it won't inevitably run into a brick wall and crush your portfolio? Hey, maybe not so fast. Maybe the rally has real staying power. Maybe when you put this move in context, when you look back at the history of the market over the last 3 decades, you can see that we may have only just begun a long march higher. That's the idea I want to entertain on tonight's Off the Charts with the help of Scott Redler, a very smart technician who's the Chief Strategic Officer at T3 Trading, as well as being my colleague at TheStreet.com who's gotten this long-term chart right so far. See, Redler points out that while the last decade or so, the market's not particularly been kind to this, to you, right? That hasn't done anything for you. You can see that right here. And the S&P 500 back to 2000 is basically trading sideways. It's now looking that we could be about to break out of the range that kept this market trapped for more than 10 years. And if that happens, the S&P is going much higher. Little less than a year ago, back on February 14th of 2012, when the S&P 500 was trading at 1350, Redler told us that he could see it going to 1700 by 2015. Since then, the S&P's already rallied some 11.7% to nearly 1508. And with the latest bullish action, Redler believes we could see that 1700 target a heck of a lot sooner than he previously predicted. But to understand Redler's long-term optimism, first we need to take a step back. For anyone who's been trading during the last dozen or so years, you have lived through the decade of worry. The decade of endless gut checks. It's been one crisis after another. Dot-com collapse, housing bust, financial apocalypse in 2006 to 8, right? Europe seemingly teetering on the brink year after year. However, Redler notes that it wasn't always like this. So check this out. This is a chart of the S&P 500 from 1976 through 2000. Look at how the market roared in the 80s, the roaring 80s. And then it surged in the 90s. In the roaring 80s, the S&P was up more than 250%. Then in the go-go 90s, it surged 360%. We had 2 straight decades where stocks were simply fabulous investments, and the whole market was practically unstoppable. Now, Redler's not saying we're going to repeat those incredible moves, but he is pointing out that it's not unprecedented for the averages to have massive multi-year rallies, and that just because we go up doesn't mean we have to go back down. All right, now let's take a look at more recent history. Take a look at the chart of the S&P from 1996 through where we are now. The market's character totally changed after the turn of the century. Rather than going up endlessly and relentlessly, the S&P 500, it became a roller coaster. And as you can see, after the run from the generational bottom in March 2009, we're now only about 50 points away from the levels where the S&P peaked in 2000 and again in 2007. Peak, almost there. Some people think this means you got to get cautious, right? Or even start betting against stocks based on the pattern of the last decade. Remember, I talked to you about that at the top of the show. But Redler believes we could be ready to finally break free from that pattern. He thinks the S&P is poised to break out above this long-term ceiling of resistance and start making beautiful all-time highs. The reason? Okay, take a gander at the S&P 500's daily chart going back to this past May. That's beautiful. Redler thinks this is gorgeous. A gorgeous picture. One with a downright perfect bullish setup to start the year. First of all, the S&P has been making a series of higher lows. The November low was higher than the June low. Several lows higher than the November one. See, I mean, those are all really, we love that. That's perfect action, okay? That is perfect action. Very bullish sign for charters because it indicates a positive, powerful trend. Second, the S&P gapped up at the very beginning of the year, courtesy of the last-minute fiscal cliff workaround, right? Remember that? Then the index digested that move, trading sideways briefly before rallying still higher, giving our January these historic gain numbers we talk about. The S&P broke out above its ceiling resistance at 1474, and now we're above the psychologically key level of 1500, which means from Redler's perspective, there's very little resistance left standing in the way of this rally. That said, he thinks that, sure, I mean, we're obviously overbought, right? Short-term basis. But on the other hand, it's possible to stay a little overbought for long periods of time without having a nasty pullback, especially when the S&P is above its 8 and 21-day moving averages. That's these two, okay? Like it is now. Another big positive for chart watchers. If the S&P pulls back below both those moving averages, then rather would get more cautious, at least short term. All right, now let's put it all together with this chart of the S&P 500 going all the way back to 1970, when I just had a huge amount of hair. We have a monster rally in the 80s and 90s, okay? Monster. In the last decade, it's followed by a period of the known and horrid consolidation, where a double top pattern kept the lid on the market. In Rether's view, this double top formation has controlled the S&P for years. But based on the incredibly positive action he's seeing in that daily chart, he thinks the index could soon break out from this consolidation range to new highs. The first time the S&P hit the 1540, 1565 level where it peaked in the past, Rether thinks we might see some resistance. But he believes the long-term trend here is definitely higher. And as soon as we get above, a close above this double top, which he is very confident, then the next stop will be 1700 and perhaps beyond. 12.7% increase from where we are right now. Last February, Rether was saying the S&P could get to 1700 by 2015, but after the most recent bullish action, he thinks we're going to get there even faster. Here's the bottom line. Look, you know I like this market. Rether's chart work gives us a technical reason to believe this move is far from over, with the S&P 500 potentially headed to new all-time highs and beyond. From a guy who's called it right, we got to take it seriously. Nicholas in Florida. Nicholas.
Hey, Jim. How are you doing?
I don't know, man. I'm a little shy of voice, but I'm in.